Hey there, Kenneth French of Vast Voice, telling business secrets to entrepreneurs. We're very, very happy you stopped by. Either you're going to watch this or listen to this because you want to take your business to the next level. You're probably an entrepreneur who's either just starting out or you've been around for quite a while and you want to take your business to the next level. You're probably a real estate investor, maybe even a real estate agent, maybe a professional or of some sort, professional advisor of some sort. And well, you are stopping by because you need some valuable advice from one of the top industry leaders there is. Anyway, thank you very much. Once again, Kenneth French, Vast Voice, telling business secrets to entrepreneurs. Really glad you stopped by.
You can invest your IRA money in real estate. The reason I'm mentioning that is because one of our clients just called in a very senior financial advisor, and he had no clue that you can do so. He had no clue that you could, invest in an IRA and then put it into land, into, commercial buildings, or even into, a duplex, as a matter of fact. Hey there, my name is Kenneth French with VastSolutionsGroup.com. But here I'm speaking on behalf of Vast Voice, telling business secrets to entrepreneurs. Every once in a while, we'll talk about, a topic of the day, and the topic of the day is just that. Can you put in, IRA real estate and IRA assets in real estate? And this is, most broker dealers where financial advisors sometimes work, they're not incentivized to have their reps market real estate in IRAs because it's difficult for compliance reasons, and there's not a lot of margin in it for a financial advisor. And we at VastSolutionsGroup.com, we take the viewpoint a little differently. We believe in open architecture. You can hopefully invest in whatever you want for the most part. There are a lot of rules, by the way, either way. But what I would say is we make it so things are unbundled. Clients can invest in, sometimes into, precious metals, into land, international assets, et cetera, et cetera. Now, he brought up a couple of really good points, really good questions. He's like, well, why would I want to do that when, meaning invest in, my qualified plan in real estate, when I could diversify, have my qualified plan invest in stocks, bonds, and then outside of my qualified plans, meaning IRAs, 401ks, invest in real estate, then I get a deduction. And what I said to him, because I shouldn't have said deduction, meaning you get tax advantages. Real estate is there's tax advantages by investing in real estate. Just, writing a check as an example to an LLC that invests in real estate versus in a qualified plan. But I said, well, in some cases, some people don't have money to invest in real estate. So, if they only have money in qualified plans, they don't want to pull the money out from a qualified plan and for an IRA as an example. So they want to invest that money, the only money they have, into real estate, hopefully income producing that's pretty conservative. So I get his argument. Well, that sounds weird to be able to put money in qualified plan money into real estate. But in some cases, it makes a lot of sense. But what I would say, by the way, go to your advisor, go to your financial advisor, go to your CPA, make sure you're doing what's right in your situation. Or, of course, you can go to our website. We have tons of tools on our website that outline some of the specifics relating to this specific circumstance. But and by the way, our website is VastSolutionsGroup.com. Again, VastSolutionsGroup.com. But going back to my point, yeah, you can invest IRA money. So not only IRA money, Roth IRA money, 401ks, profit sharing plans, cash balance plans, defined benefit plans. You can invest those assets into real estate. And sometimes it's nice, sometimes it's really nice to do so. Based on the fact that, you can keep an eye on your qualified plan money, especially, again, if you don't have money outside of your qualified plan. You're only, mastering, if you will, one bucket. So if you have money outside of a qualified plan, you're going to be managing, let's just say, 5 different buckets, 5 different LLCs, if you will. And seemingly it seems a little bit simpler because it's in one, if you will. If it's, let's say it's an IRA, you're only looking at one number to see how what your rate of return is. So it's a little bit more simple. Now, I should also note, going back to the earlier point, if someone has quote, a ton of money, sometimes it doesn't make sense because you want to put money in, non-qualified money, enjoy the tax favors of real estate outside the plan. And then also, again, have maybe some qualified plan money in real estate. But generally, we would take the position, put qualified plan money not into real estate unless the circumstance dictates it, as we've talked about. So what I would also say is, if you have any questions, please, we love answering these questions. I was really shocked. It's funny because he even said, he's like, at the end of the conversation, he's like, "Oh, I'm glad you told me about this. You got to do an episode about this." I said, "Hey, I'm going to do an episode about it right now, as a matter of fact, right after we got off the phone." So now you know that you could put in, qualified plan money, IRA money, Roth IRA money, 401k, profit share plan money into real estate. Now, there's rules. I'm not going to go over the rules. That could take a whole nother 10 hours sometimes of an episode, but really, at least you know that you can, and sometimes it makes sense to do that. Go to our website. We have, I just remembered, we have a video on that, specifically on some of the rules that outlines what you can and cannot invest in as far as your qualified plan money. And then also there's there's custodians that just specifically, that's all they do is help retirees or to-be retirees invest in qualified plan money in real estate. Usually the government allows them to be called trustees, because if you're investing money into, let's say, an IRA or a Roth IRA, you need to go to a custodian that's kind of registered, that's registered, that allows for and can hold assets for people who have Roths, as an example, Roth IRAs, and also IRAs who are investing into real estate, because you have to have a trustee. And then, by the way, on the way we do our qualified plans, we make it so they're self-trusteed. So usually the client is in charge, or the trustee is in charge, or sometimes the business owner is in charge of the assets. Therefore, the government allows business owners, in this case, let's say as a 401k or profit sharing plan, defined benefit plan, to invest in real estate, and you don't need the custodianship. We can go over the specifics if you get a hold of us. Now, if you have any questions about these, again, go to the website, but also if you have any suggestions, as a matter of fact, relative to any of the stuff that we do here on the Vast Voice, telling business secrets to entrepreneurs, please email us. We love getting the feedback. info@vastsolutionsgroup.com. Info at vastsolutionsgroup.com. info@vastsolutionsgroup.com. Totally appreciate you taking the time to listen to this, watch this. If it's helped in any way, please give us, send us an email and say, hey, applaud us. If there's things that we need to do to change this, please let us know. Once again, this is Kenneth French, Vast Voice, telling business secrets to entrepreneurs. Thanks.